mess with me. Baby, I'm a gangster too. 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 Baby, I'm a gangster too.
My name is Sick, and you know what we're about to do. Let's get it. Hands up in the air. No, that one, no chase, no trouble. And I'm on day, let's make some moves. And I'll bet you wanna be skinny and dope. You know that's coming up. That's coming up.
Everybody, happy Crypto Friday, happy Saturday for some of you, already Saturday out here in Australia. We're gonna get started in just 2 minutes. Gonna do some answering your questions that you submitted throughout the week, and then any other questions that pop up. Go ahead and share this out with those people that you know would benefit from today's session. Get in those Telegrams, WhatsApp, Discords, Instagrams, all of the above. Let everyone know we're live. And we're gonna get started in just over a minute, fam. let's get started here, fam. Hello, hello. Happy Friday. How are you all doing? Drop a 111 in the chat if you're here present, can hear me loud and clear. Let us know if you're new. Let us know if you're new in the chat as well so that we can welcome you here. If this is your first session here with us, I am Corinne Florence. This is a DCX Fast Start channel, so we come back to the basics to help you guys get started if you're brand new. And yeah, if you're less new, sometimes it's nice to come back to those basics, to those foundations, and just kind of dot your I's, cross your T's. So that's the channel here. So typically, what we like to do on Fridays is answer questions that came up throughout the week, or go over a specific DCX tool. Just this week, we had an incredible guest come on our Wednesday session. If you missed it, I highly, highly recommend you go and check this out. If you are a brand new person, this might be a little, let's go a little bit more intermediate advanced for you. However, it's a really great session to watch because Charlie is one of the other educators. Here he is right here. He does Scalper Club 5 times a week. So he does live analysis, sees what potential setups there are. And on Wednesday, we went over his scalping strategy. So I've been talking to Charlie. I look forward to doing a little bit of like a more basics boot camp to help you guys then really jump onto his strategy and really understand you know, what it is that he does. So then when we jump on Charlie's sessions, we can be more actively trading, right? So what Charlie does, and what a lot of the questions that I will answer today are in regards to, is so scalping the markets, which I want to remind you all, or if you're brand new here, let's refresh that, get that loaded. So what scalping is, or intraday trading, right? And this looks like it's not loading properly. Interesting. I might try another browser. But really what those two things are is scalping and intraday. Intraday. Okay, so these are trading. Let's do a few just key things, right? What these are trading on lower time frames. And remember, time frames are what? Time frame are these up here that we can go and select what do we want the candle, what time period or what time range do we want the candles to represent. So we can come back and look at that a little bit more in detail. So we're trading on lower time frames, meaning that we're catching faster movements, right? And as we heard even Charlie say, you know, based on his personality, he never wants to go to sleep with a trade open. And that means that if you never want to go to sleep with a trade open, you're definitely a scalper or intraday trader. Okay, so these are types of traders that you can be, and just different styles of trading. So close all trades before going to sleep, right? So you're taking one or multiple trades within the day, right? So that strategy that we spoke about on Wednesday is really for scalpers and for intraday traders. If you don't know the various types of trading styles that there are, make sure that you check out the leverage trading bootcamp that we have here, where we talk about the different styles of trading that there is. Okay, so this is really what we went over with Charlie. It's a scalping intraday strategy, and what he showed us on Trading View. Okay, let me remind you, Trading View. Okay, what is Trading View? Trading View is an external website to IM Academy. Okay, And TradingView is what you'll see a lot of the educators come on and use. Okay, you'll see a lot of the educators come on and use TradingView. Let's remove these. Okay, and so they use TradingView to mark up their charts and to trade. So you see a lot of the educators use that. Remember, this is an external platform to IM Academy, to DCX, but you guys will learn to use this as you go through, do your various analyses, etc., etc. If you want to learn how to use TradingView, I recommend you watch our session right here, how to use TradingView, and just go through step by step, pause it, duplicate what it is that we're doing here so that you can set up your TradingView correctly. And so that when you see the educators on Go Live, you understand what they're using and how they're using it as well. Okay, so that's TradingView there. So Charlie showed us on TradingView, but what he was showing us is something that, and for those that just jumped on, we're talking about this session that we did here on Wednesday. And so what he showed us on TradingView is something that we can use through our scalper. So this is our scalper right here. How you access the scalper inside of DCX is you can either go directly to swipecoin.im, that's the URL there, or otherwise when you log into my swipecoin.im, which is the desktop version of the app, you can come down and click scalper and that will just open it up straight for you. Okay, let's see if we can get it to load properly today, or there we go, it's loaded properly through here. So this is the scalper. We go over this a lot together so that we can understand really how it is that we use this. Okay, so look at that, we had that red arrow. I don't think the zone was drawn up properly. Okay, and we'll talk about what break and close is and go through the little steps because I received a fair few questions from this. But so this is the scalper, and the strategy that Charlie showed us, we can start to use when we're beginners, especially through the scalper. Why? Because I don't know if you guys remember, but the first step, that's both the strategy inside of the scalper as well as Charlie's strategy that he showed us for scalping, is looking for the break and close. Okay, break and close. So I had a fair few questions about the break and close, which I want to go over today to help you guys understand this concept a little bit better. Let me check the chat here. Okay. Hey, 7Birdie7, nice to see you here again. Been here 11 days. Let's go. Almost 2 weeks. Okay, awesome. I'm going to go ahead and answer that question immediately before we dive into this as well then. So, as we were saying just before, right, Charlie, myself, because I use this strategy now too, when we use this strategy, we're scalping or intraday trading, and what we're doing is that we're doing it on the leverage trading. So remember that when we're leverage trading, okay, when we're leverage trading, we don't care if price is going up. We can catch a movement up. We can catch price move there. Let's make it back there, boom. So we can catch the price going up, meaning I buy down here, I sell up here, and I earn the difference between here and here, right? Now with leverage trading, not only can we do that, but I can also profit when price comes down. So if I'm on my MT4, if I'm on whatever platform it is that I am doing my leverage trading on, I can press the sell button here and take my profits down here, and I would make that profit here. Okay, so with leverage trading, we have the ability to do that. And that's why Charlie was showing us that we don't care if price goes up or comes down. we can profit out of that, okay? Now, all of this, and this will lead into a little bit of Angela's question as well. So Angela, I'll get to that too. Now, all of the leverage trading side of things, we do through a platform that allows us to do leverage trading. So we have examples here in the favorite sessions such as CTrader, MT4 or MT5, which we also have a tutorial down here. You can also use platforms, and this is where, unfortunately, guys, you will, well, fortunately, I actually like to say fortunately, we encourage you guys to do your own research on these platforms, where you're going to need to go through some of these even potentially and see which of these platforms allow you to do leverage trading, margin trading, futures trading, right? So when you trade on one of these, they will allow you the possibility to do what's called leverage trading. Now, through these, where you're fortunately going to go and do your own research, see what works best for you, the country that you're in, what's allowed, what's not allowed in your country, etc., etc. You here will just trade directly on these platforms. Instead, when you're using something like MT4, when you're using something like CTrader, okay, you're going to have to go and find what's called a broker. Okay, let's have a little look here. A broker is an independent person or company that organizes and executes financial transactions on behalf of another party. They can do this across a number of different asset classes, including stocks, forex, real estate, insurance, cryptocurrency, right? A broker will normally charge a commission for the order to be executed. Okay, so this is really important to understand, that you are going to need to find a broker that then will align to your CTrader or your MT4, MT5, so that this is simply the platform, but all the trades that you're taking are going to be through the broker. The broker is what gives you leverage. So for example, remember another thing about leverage trading, we can write it here. When you are leverage trading, not only can you profit when price goes up or down, it's just about you correctly forecasting that, but two, we also have something that you trade with leverage. We have something called your leverage ratio, okay? What does this mean? In very simple terms so that we understand, let's say broker gives you a 1:100 leverage ratio. This means that when you trade with $1 from your account, you're actually trading with $100. The broker matches, well, yeah, they give you for every dollar, you're actually trading with 100. So that's done through your broker. Different brokers will allow for different leverage ratios. They will have different fees. They will have different what we call swap fees and spreads, etc., right? So these are two key things about leverage trading versus what we call exchange trading inside of crypto. Okay, so it's through the broker. It's through the broker that you do the trades, that they give you this extra money. But remember, it sounds all fun and like, yay, that means that I get to trade with more and that means that I get to make more money. But no, the thing is that you can also lose more money, right? So that's why I personally recommend, I don't think you need more than a 1:50 ratio. So when you're trading with $1, you're actually trading with 50. For every dollar that you put in a trade, you're actually trading with 50. So what was I going to say? I was going to say, right, brokers. Where do you find brokers? So by going on Forex Factory, they do have some brokers listed here that you guys can do some research on. You know, they'll tell you the pairs that they trade. You can go and research each one, even based on maybe the countries that they are from, and if they're allowed in your country. Oops. So, you know, for example, I won't give you any examples. Unfortunately, I need you guys to go and research this stuff and find what's best for you. And see here, it says max leverage and the types of leverage that they give you. Don't get greedy here. Because remember, why do these brokers give you such huge leverage ratios? And here they have it the other way around, right? So for every dollar, here is $500. But remember, why do they do this? They do this because, yeah, maybe you will earn more, but you can also lose more. So be very careful with the leverage ratio. Even if they allow you to do more, I personally wouldn't go over maximum 1 to 100 in my personal opinion and experience. But yeah, research these guys. And if you're looking for, okay, Corinne, but what are the things that I research? There's also a little video here that I give you 9 things to consider when you're choosing a broker. So this will really help you choose that broker. So Angela, for example, you're asking, you know, you talk about how MT4 is not ideal for scalping when you have a small account. Correct. For example, I would not be trading, you know, Bitcoin with an account that's less than $1,000 on MT4, right? But there are other platforms that you could look at, and that might give you that ability to do that. So yeah, and Angela, for the US, it does get a little bit trickier, unfortunately. I'm very limited to what it is that I can say. What I can say is go and talk to people that are in your teams. Maybe they're already in your country and they could maybe give you, you know, they could tell you, okay, hey, this is what I'm using. Maybe you can check that out for your country. So just drop a 111 in the chat if everything I've said so far makes sense. If it doesn't, go ahead and ask more questions so that I can answer those. So coming back to, while I wait for you guys to answer in the chat or ask more questions, break and close. Break and close is something that I had a fair few people ask me about after Charlie's session and after our session last week as well, when we looked at the scalper together. Okay, so let's go take a look here. What is a break and close? So I want to remind you just very quickly, how do we even read a candle? Okay, how do we read a candle? How do we interpret a candle, etc., etc.? Okay, not even looking at the exact price or time or anything like that. Let's just look at a candle. So when we have a candle, let me do this. There we go, just a blank page. When we look at a candle, okay, let's say, for example, we have a green candle, which you're going to learn that the color of the actual candle doesn't even matter too much. For example, you see in my trading view, I have black and white, but I'll come back to that in a second. So let's say, for example, on the scalper, we do have a green candle. And let's say that our candle looks something like this. I wanted it more centered, my OCD, but okay, it's gonna need to be a little bit on the side of this drawing. But let's look at a candle like this, okay? So when we're looking at a candle like this, there are some key points that it is that we can look at. So this right here, this line here, right here, this is called a wick. Okay? This is called a wick. And now this one right here as well, down here, is called a wick. Let's just start giving it some names. Then we also have this part here. See the bit that's like literally that rectangle? That we call the body of a candle. This is called the body of a candle. Other significant points are looking at a green candle. This down here, which is the bottom part, it's like this bottom line of the rectangle. This part right here, that line right here, that is called the open. That is the open of the candle. That line right there. Then the other, which is the top part of the body, the top part of the body, so this line right here, not the whole body, but just the top part, that right there is called the close. The close. Okay? So maybe you can already start thinking, terminology when they tell us open and close. Break and close. Okay? So that's what it is that we're looking at when we're looking at a green candle. Why is this candle green? Because when the candle opened, prices started at right here. So if we look across to the right hand side, it's going to tell us the little gray box, 17,283. Meaning when price started for this particular candle, at that point in time, price was $17,284. $284, okay? So this right here is the start of the candle. Now, over the period of time that this candle is going, okay? Let's say, for example, right now, we're looking at what? We're looking at a 15-minute time frame. That means that this candle here is a representation of what's going to happen over 15 minutes. From the moment that it opens, for the next 15 minutes, where is price going? So it tells me from right here, okay, over the 15 minutes, I see price move. And we don't know exactly within those 15 minutes, where did price move, right? We'd have to go to lower time frames for that. But what I know is that price started here. Over those 15 minutes, price moved at its lowest point at the bottom of this wick down here. Meaning price at its lowest point, as this example, if we look on the right-hand side, $17,263. Over this 15-minute time frame, the lowest price that it got to was $17,263 for one Bitcoin being equivalent to that. It ranged, it moved, it kept going. It went all the way up to the top of this wick at $17,472. Price moved all the way to the top here within those 15 minutes. And at the end, at the very last moment within those 15 minutes, price closed. Price closed up here where we drew here. This is the close, the top of the body. The top of the body is when price, at the end of those 15 minutes, price ended up here, meaning it was at $17,435. Now, why is it a green candle? Because price started lower than the price that it finished at the end of the 15 minutes. Meaning that over these 15 minutes, price went up. Price started down here, but from the start of the 15 minutes to the end of the 15 minutes, price went up. And that's why typically we see it as a green candle as a representation, okay? Just saying, yep, price opened low and started higher. So this was a green candle. Overall price ended up being higher. Drop a 111 in the chat if that makes sense. For some of you that maybe are a little bit more advanced, this is going to be obviously something that you understand already, right? So that's a green candle. That's when price went up over those 15 minutes. If I see this green candle on a 1 hour time frame, we're obviously going to see things move and change a little bit. It even changed my drawing. Let's just change my drawing up, fix my drawing up. Okay. If instead we're seeing this green candle on a 1 hour time frame, remember the concept is still the same. The concept is still the same. Price opened here. It started here at the start of that time frame, that time range that we have. It moved to its lowest point at the bottom of this wick. It moved to its highest point at the top of this wick. And it closed. The time ended. When the time ended, price was here when it closed. But this whole time range was now not over 15 minutes, but rather it was a representation of an hour. Okay? I hope this is all making sense, fam. So every time that you go and change the time frame, it will change the candle. It will change the candle, but you're still going to read the candles in the same way. Now, when a candle closes, we're going to see the following candle open at the exact same price. Because when it closes here, it's going to open a new candle at the same price, and then it's going to continue moving up and down in price for the next, in this case, hour. Okay? So we're moving up and down, and let's say, for example, I had price open at the top there, and this time close lower. So now this candle over here is always going to be the same. That's always going to be its open, and that's always going to be its close. Okay, let's try and fix this up. Boom, boom. Okay. So nothing changes for this candle, but this next candle, now remember, where the previous candle closed, the next one opens. So here on this candle, this is the open price. Other way around. This is the open price. So this candle opened up here, and because it's a red candle, it means what? That we saw price come down and close lower than it did when it opened. So by the end of, not clone, close. By the end of this time frame, which now we have the example of an hour, price closed lower than when it opened. Okay? This here is still called the body. We still have the body. Right? But let's say, for example, and we see this sometimes we don't see candles that have wicks. And that just means that over time, over this time period, this was the highest price that it got to, and this was the lowest price that it got to, okay? Still a candle, it's just missing the wicks. But because price never reached up higher than when it opened, or price never reached lower than when it closed, okay? Awesome. I'm really hoping that this is making sense. They're very basics, but when we can start to really understand what are the candles telling us, how do I interpret this? Like, what is it actually telling me? And how can I read even these basics? It's going to really help you then with understanding things such as open and close, okay? So that right there is reading candles on every single time frame, right? And if we come back and we look, let's just refresh this. So it'll get rid of all our drawings. So if we come to look now, okay, let's start here. Let's really zoom in. So what do we see? Now when we're going and reading these, right, we're starting to see it. We're starting to see it more clearly. Okay, let's start with this green candle right here. I wonder if I can zoom in even more so we can really get it. Okay, so let's look at this green candle right here, right? What do we see? Price opened at the bottom of this wick, of the body. At the bottom of the body, price opened here. We see the wick. We see the wick coming all the way down to its lowest price at 16,821. So that was the wick. Then the price closed up here at the top of the body at 16,841. Boom. Next candle opens at roughly the same price. There was a little bit of a difference. It must have been a fast movement, right? So the next candle opens where the previous one closed. So close of the candle, open of a candle. Opens here. Price comes down all the way to the bottom of that little wick. You see the little wick there, right there. That was the lowest price. And then price closes here. Next candle opens at the same price. Opens, comes down to the lowest part, a little bit down the bottom of that wick. Top part, or the top price at the highest point of the wick. And then the candle closes here. Next one opens. Okay, and see how that repeats over and over and over again as we go through these different 15-minute time frames right now. Remember, every single one of these candles is 15 minutes. So that's how we're reading that. Very, very basics, but absolutely key. So now that we understand this, we can go and look. Like, for example, here, we had this example previously, and Charlie was showing us the same thing on Wednesday. I have my zone drawn up, represented by this pinky reddish box or rectangle that goes all the way across, right? And what was he saying? We need to see a candle break above this zone. We need to see the candle not only go here, we don't need to see the wick going into the, we need to see it fully break above. In this case, we had the little blue arrow saying we need it to break above. We need to see a green candle in this case break above it, and not only come up here, come back down. Maybe we see the wick like this. Maybe we see a wick go above. That's not a close. This is not a close above this zone. Yes, maybe price moved above, but it didn't close above, because we just learned what is a close. A close is when the time frame is up, when that 15 minutes is up and price ends here. And the next candle opens. Maybe the next candle goes up, breaks, and closes above before the next candle starts, right? So this here, this right here would be the break and the close above. And that's what we call the breakout, okay? And as Charlie explained to us, we could enter here, or even better, what did he say to do? we wait for a retest. So what is a retest? A retest is when we see price not only go up and break above the zone and close above, but we see price come back, touch this zone, and then shoot in the direction that we wanted to. That is a retest. This right here is when price has broken above, we're coming back down, we're retouching that zone, we're retesting that zone. Okay, in this case, we're going and we're creating a support. And when price has retested, then it shoots back up. And this here on the retest is where we want to go and enter into our trade. So how would we see it as candles? As Charlie was explaining, we want to see not only this break and close above, but we want to potentially see the following candles come back down, putting them a little too close. There we go. We want to see the next candle, the following candles. Sometimes it can be multiple candles, not just one. But we want to see the next candle open, come down, close, retest, and then price can start to shoot back up, and that's when we would enter. We want to wait for that retesting of this zone. If we then instead see price continuing down, we're obviously waiting, okay, for the next confirmation. So I hope by that explanation, break and close are a lot more understandable now. And I believe that it's really once you actually understand, okay, what is it that the candle is doing or telling me? How do I even read the basics of a candle? That we can understand break and close so much better. Why it's really important to understand the break and close is not only for the scalper and the scalping strategy that we showed you guys, but also remember when we're using swipe coin trades, when we're using the swipe coin trade ideas that come from the leverage trading, what's something commonly that we see? On the right hand side where we have the notes, we have idea invalid with a 4-hour open and close below the invalidation zone. So now, because you guys understand how to read candles, the open and close, we understand how to identify that. We now know, oh, okay, so where the invalidation zone is drawn, we need to see on the 4-hour an open and close in whichever direction then the educator says. Okay, and we went over this on Monday, but if there are still questions, then definitely go ahead and draw them in, and ask them in the chat. Let's go. I love questions. I'm going to come here in the chat now and check it out. Why I really push for questions, guys, is because I remember one of my mentors once said to me, if you want better answers, if you want better solutions, you need to ask better questions. And it just made so much sense to me. And I really believe that it's when we ask questions and are not afraid to ask those questions that then we can get the answers that we're really after. So, and remember, the questions that you're asking yourself is probably the same questions that majority of people are asking themselves too. So this is a judgment-free zone here for any questions that you guys have. Awesome. Let me go ahead and ask and read the questions. Okay, we have number ones, so you guys are getting it. Okay, so various questions here. So let me answer this one here. Yes, so check Forex Factory for the brokers, but yeah, when you guys are getting started, okay, and we go over this at the start inside of these sessions right here. I believe definitely on how to use the C Trader or also how to use MT4. So, and actually, in the leverage trading boot camp at the very end, I believe it's in this one. Yeah, in this one here, I walk you through step by step how to set up your MT4. And there should be just even a default MT4 like demo account. So don't stress too much about the broker, because when you're first getting started, guys, I literally just want to put you into taking action. And that's why one of the first videos I recommend to people is watch this one right here. How to use the swipe coin trades like a pro, the mindset, the swipe coin, and how to set up your MT4 correctly, right? So I just want you guys taking action, because it's as you take action that then those questions that I was talking about will come up. So just start using the demo MT4 or whichever demo account you can get your hands on. Just start practicing, so then you can find the right questions even when you're then going and searching for brokers, right? Yeah, so what I was saying is like, typically on something like Swipe Coin Scalper and just like your default trading view, it's going to have green candles when price goes up and red candles when price goes down over that time frame, right? But for example, and this is something that for me works really well, as you can see on my chart, I literally just have black and white, because sometimes I feel like, especially when I'm scalping, like when you see green or you see red, it kind of like plays with your emotions just a little bit more. I mean, it's nothing super significant, but it could. Whereas when it's like black and white, you just become more neutral. I know people, like I think like here, for example, one of the educators, he instead uses black and blue, right? So it doesn't really matter about the color of the candles, because if you guys understand what I taught you today about just reading the candles right, I don't even care what the color of my candles are, because I can tell right here, where's my arrow? Right here, like I can see, okay, this candle right here, price started down here, price opened here. How do I know that? Because the previous candle, the price closed here. So I know where the prices are the same on that candle, boom, this is where price opened. And then that means that price closed at the top of this body, meaning that if prices opened low and price closed above, that means that that's a positive result in terms of not positive result. It means that price went up over this time frame. For example, I have a 2-day time frame right now. So over 2 days, price started low and went high. Next candle, price started here. Price closed down here, meaning price went down. So that would be what? A red candle, but I don't need to see the color. So price, remember, is always moving. I remember one of my mentors always said, look at Bitcoin, when you're looking at the chart, look at it like a moving organism. Like price is always flowing and going up and down, right? And these candles are just a representation of what's happened with the movement in price in history. When we're looking at this, guys, and I'm really zooming out, we're looking at history. What happened with price over a period of time? That's simply what we're looking at. I know charts can be a little overwhelming when you're first looking at it, but when you start to understand these things, then you can definitely put it, it just starts to make more sense in your brain. Okay, this final question, and then we should wrap things up. 2 frames on exchanges. Candle time frame will change to 5 minutes when I change the month, day, time frame. I'm not sure what the question really is. So every exchange should, like if you're looking at a chart on any exchange, and different platforms will give you like access to different time frames, right? So for example, when we're using the scalper, we only have access to the 5, 15, 30, 1, 2, 3, 4 hours, and the daily. So you can choose whichever time frame. When you say you have trading view, then you can have more time frames. You can add different specific time frames that you might be after on the paid version. Like for example, you can have 7 minutes, right? And that still is always the same. Still means that every single one of these candles, now we're looking at a 7-minute representation. Okay, so exchanges should give you whatever it is, the time frames that they allow you to have accessibility to. Now, when you're exchange trading, so you're looking at the exchange ideas, if this is what you're referring to, you'll see that a lot of the educators do use a bigger time frame. So like we're looking more at the daily when you're looking at exchange ideas. So, you know, if we're looking to get to Bitcoin for an exchange trade, they would probably be looking at price action within the daily chart. However, majority of people then, when you're looking at actually entering, you know, you're probably going to come down to the 5-minute. When you're especially leverage trading, always go down to the lower time frames for the entries. Okay. I'm not sure if I answered your question there. I'm not sure if that was the purpose of the question. I hope to have answered that properly. Guys, I think we're going to wrap things up there. Drop a 111 and let's change it up. Let's put a number 3 in the chat if that was useful to you, if you learned something new, if you think that this would be valuable to especially the new people. If you do know anybody that is brand new or maybe needs to come back to basics or is struggling with just understanding the basic concepts, do go ahead and share this session with them. Let them know to go back and watch the recording. I know that the recording is always here and available for those people that can't catch it live. So remember, we have 3 sessions a week, Mondays, Wednesdays, and Fridays. Do go live and check your time zone based on where it is that you are. You can go and check where it is that you are and the time zone that you are in. Okay. And guys, next week, I believe we're starting astrology here. I believe next week, this session, we are starting astrology here. It is a new moon next week, the 23rd of December. And as I said on the DCX roundtable in the last session, a lot of people have been asking me about astrology, something that I've been studying now for really over a year and just really diving into it. So I look forward to start sharing with you guys some more on the crypto astrology stuff starting from next week. And what more perfect time than with a new moon? So guys, thank you so much for your time and for sharing this time with me this Friday evening, Saturday morning. Have a beautiful day, beautiful evening, fam. I will see you all next Monday.